It's good, boys. Charney here with another video. Today we're going to be going over a AUD JPY 5-minute setup that I took today. This trade did end up losing, but of course I'm going to show you guys and being 100% transparent. There's a difference between messing up personally as a trader, in my opinion, and taking a stupid setup that you know is stupid. And there's a difference between just taking a normal standard position and it loses, and that's just your basic loss that's included within your data that should automatically be included within your back testing, right? The losses to get upset over, in my opinion, are the ones that you personally as a trader messed up on, in my opinion. And I'll fully admit, right, if I do something like that, I will be mad at myself and I will spend another couple hours on the charts just back testing and just going over stuff because it's like I did something wrong, right? But this trade fortunately, was a very good loss. This was a standard position I would take all the time. And it's just one of those ones that's just a bit unfortunate. Bias, everything was 100% correct. I was long on AUD JPY. I got stopped out by a little wick. And then price continued trending bullish. Okay, and I'm gonna explain everything. I'll pull up the charts. If you're new here and you don't know exactly how I trade, I will show you guys the strategy real quick. But yeah, let me pull up the charts. All right, here we are on AUD/JPY. So my bias on this trade was obviously bullish, as you guys can look at the chart and see that we're obviously bullish, right? Um, right here is on the hourly time frame. Again, pretty clear that this is bullish. Um, and AUD right now is bullish, fundamentally as well, right? Against the Japanese yen. So those two things paired together, paired with just staring at the chart, pretty obvious that anyone can get a bullish bias, um, in an area like this. So for me, I was looking for buys on this day today, right? I was looking for buys. Really, no reason to go short, at all, right? I was looking for buys. So if we drop down to the 15-minute time frame, you can see price clearly trending, right? You can see price is clearly trending. If we go in this 4-hour time frame, you can see that first area that price is running towards is this draw on liquidity here. First, just because it's a uh interest point, pretty much it's just a high, right? It's not like it's going to be like some crazy thing, but it's a point that price is chasing to in a bullish market, right? This is just your last high. This is just something to keep in mind that hey, price might internally reject at this level. Keep an eye on this, but internally within this move, we're going to chase this high. So let's be bullish internally until we chase to that high, right? That's just a little thing to keep in the back of your mind. You can see, right, we push through that high and get a little rejection. It's just kind of standard, what you can expect, right? But I have that in mind, and I'm like, cool, we're chasing towards this high. And we're bullish, right? Internally, anyways. So I'm gonna be looking for buys, right? And around this area, let me quickly go over my entry model here real quick. Before I do anything. So my entry model is we want to make sure everything's in line, and internally we're going to drop down to the 5-minute time frame. And what you're going to see is you're going to see trending markets like this, and you're going to see eventually these trending markets will come down and take out a level of liquidity to the left. It'll take out an important level of liquidity, and after doing so, we look for price to tap into some sort of order block. And after we get that tap into that order block, and we get a valid reaction without a candle closing in it or anything like that, and we get a valid reaction from that order block, then we are going long on this position, right? And all you're essentially doing is just catching that trend internally with an internal liquidity sweep, okay? Because price is always seeking liquidity within the market, right? So that's all you're essentially doing. What I show you guys, well, the bias is bullish, right? The bias is obviously bullish. And right here, you have that exact same thing that I kind of showed you guys, which was a trending market, right? Price putting in higher highs and higher lows, consolidate a little bit right here. And right here, you have that that order block, right, where price shot off of. And then internally, we have an internal level liquidity. Is this level, I'm sorry, guys, if my monitor is lagging. It seems, or my MacBook is lagging. I don't know why it is, but is this level of liquidity like massive by any means, right? Is this like a massive level of liquidity that's going to move the market? No, it's a 2 standard level liquidity, okay? Don't think that price is just sweeping liquidity and banks and institutions are now in because we swept liquidity. Bro, this is such a minor level. None of that is playing out, okay? Maybe if we have, stacked liquidity, loads of consolidation, and we sweep some major level, potentially. Right now, no, right? But it's in line with the overall market, and it aligns with that internal constant seek of liquidity that this algorithm is putting in and day out. We're always seeking liquidity and imbalances within the market, right? So all it is you got your higher time frame bias in line, and you see this happen internally, and you're like, cool, this is a great trade, right? I have that level of liquidity. We internally swept that level of liquidity. We have that order block, and we got a nice reaction. Next, what I like to do is I like to ask myself after I see that, is there any reason for price to not react from this level and move up, but instead chase to a deeper level and react and move up? And I didn't really see that in this one, right? I have some other confluences and kind of tools that I use that I don't put onto YouTube here yet for totally free, right? But I didn't see anything like that. And normally, if you have stack liquidity right underneath this or anything like that, that's a reason for price to go and chase lower. Another thing, if price just took out a major draw on liquidity here to the left on that higher time frame, right? If we would have just potentially taken something out like this right here, that 4-hour draw on liquidity I showed you guys, right? If we would have been doing anything like that, I would have been a little more weary because I would have been like, okay, be careful because price just took, something major on that higher time frame. Price might chase to lower prices. Price might chase deeper liquidity and more liquidity to fuel that next move up, right? But we never took any of that, and we never really had anything resting below here that was like price will come down lower. Like I'm fully certain, right? Can price just come down lower even though I don't see anything and continue up? Yes, it can, right? Because nothing's 100% in trading, right? So price can 100% retrace a little bit lower and then continue up, and I can be wrong, and that's totally fine, right? But just for my edge, and what works best for me is I like to look and make sure the 100% certainty that, hey, if there's something clear as day, if there's a bunch of consolidatory liquidity right under this zone or anything like that that's showing that price is probably going to go seek that liquidity instead of just this level, then I won't take it, right? If we have, again, something like, let's just say price right here was just consolidating, right? And then pushes up with this internal liquidity that you see right here. And if price is right here, and we have all these even lows right here, price will probably go and manipulate those lows before we continue up, right? So you have to be, kind of keep your eye on that, right? And understand where you're at in the market, but there's really none of that, right? We don't have any of that, and everything's just trending bullish with lots of volume, okay? So without seeing any of that, really checked everything out for me, and I knew we were bullish overall, so I entered this trade after the bullish candle close here. So first candle tapped into the zone. And again, I enter these trades when we get that first bullish candle close. And then for this strategy is one of those strategies that you can place a pretty tight stop loss. And your stop loss is usually right under that candle wick that tapped into that zone. So after that, again, just let the trade play out. And unfortunately, this is just one of those ones that I always like to say it's a business expense, right? You run any single business, you make your profit, but you also have to, subtract your supplies or subtract your cost or anything like that. It's just a business expense, right? Same thing with trading. If you follow your rules within your edge and you're not doing something as a human wrong, right? I didn't enter this off like greed or enter this just off following no rules, right? If that's the case, then yes, there's something wrong. But when you follow everything head to toe, this is just a business expense, right? You did your job today. You was there. You capitalized on that position today, right? I did great. If I wouldn't have done great if I would have, again, done a bunch of random stuff that isn't with my trading plan, right? So, trades like this, these are the ones you have to be happy about. No one likes losses. I'm not going to get on here and sugarcoat that saying no one likes losses. Okay. But you start to realize that you need to almost differentiate bad losses and good losses. Your good losses, there's really no reason. The more, I look into it and the more I've traded and the more experience I've had, there's no reason not to, to beat yourself up over good losses. They're going to happen. You can't run away from them. They're going to happen, right? Your job as a trader is to make sure those losses are good losses that you account for in back testing, good losses that follow all your trading plan, and good losses that, again, following those rules, lead to an edge over time, right? That is, what you need to be practicing. So, again, just a little side tangent there, but order block, liquidity, we get a sweep of that internal liquidity. Again, I'm not, trying to get on here. I know some guys that teach this strategy try to say like, oh, we swept liquidity. Investors think this is a great place to buy in at this and that. Bro, the 5-minute time frame, it doesn't matter. This is all moved algorithmically right here, okay? Higher time frame and stuff like that, yes. But again, that's why we pay attention to the overall trend. We know we're bullish and we know algorithmically we're always seeking liquidity. So we see that small algorithmic seek on liquidity and we internally take that liquidity to push to higher prices because we were bullish on that day. And that's exactly what happened, right? Got a reaction. Fortunately, just got wicked out, right? And then trade just ended up playing out like normal because the bias, the underlying reason for that trade is correct, right? I would have been incorrect, right? If this trade would have just reversed and price would have just absolutely dumped from here. And if that wasn't due to fundamentals, then I read the chart wrong, right? I did something wrong as a trader. I read that chart wrong. That technical analysis is not correct. Again, if no fundamental news come out. Anytime with Forex, fundamental news can come out and switch the trend, right? But yeah, again, understanding what's a good loss, what's a bad loss. And this is just standard loss, right? So I want to get on here, show you guys not just the wins, but the losses as well, right? So this is the first trade I've actually taken since March 17th of last month because markets have not been good right now with the war. So again, I've been just perfecting my craft, doing as much as I can. Within that, gathering as much data and just practicing as much as you can. That's all you can do in these times, right? So again, there's my strategy. There's a standard loss. If you want to look more into the strategy, I have actual, bunch of other videos on it as well. In my YouTube video, in my YouTube channel, I have back testing videos. I have trade recaps posted in there and all kinds of stuff. So that's pretty much it for today, boys. I appreciate it, and I will see you guys on the next one. Peace.